So 2022 was no doubt a hectic real estate market at the beginning, and things have slowed down a lot towards the end. But what the heck's gonna happen in 2023 in San Diego with our real estate? Well, I wanna share a couple predictions with you guys and show you some of the data, so let's get after it now. Welcome back. If this is your first time here and you'd like to know more about San Diego real estate or life here in San Diego, make sure you tap that subscribe button below. My name is Nick, and you guys reach out all the time, and I absolutely love helping you guys out. So if you're thinking about making a move here or around San Diego, make sure to shoot us a text, shoot us an email, or just straight up give us a call so we can help save you a lot of time. As I mentioned, 2022 was quite the year for real estate. It was a little bit crazy at the beginning, and it slowed down a lot towards the end. What I want to do in this video is just share with you guys my predictions through data and through experience. So let's go ahead and jump into the first thing. First thing is we're going to see a lot less investors entering the real estate market. And I'll tell you why. From 2000 to about 2021, nearly 19% of homes that were bought here in San Diego were actually bought by an investor. So that's about $3 billion worth of real estate. And during the pandemic, and even now across the whole entire nation, about 16% of homes are actually owned by investors. So that's about 1 out of every 6 homes. And now that prices have definitely cooled down and interest rates have gone up and prices are just trending downwards, a lot of investors are just backing off. In fact, investor home purchases have actually dropped about 30% just in the third quarter of 2022 compared to the same time last year back in 2021. So that's one of the biggest drops in investor sales we've seen since the Great Recession, which was back in that 2010 area. So I think we're going to continue to see a lot of investors sit back and watch, especially those fix and flippers, as this market stabilizes. Next is our inventory here in San Diego will remain the same or maybe even dip a little bit lower. And it's no wonder prices have just remained so high over the past couple years here in San Diego, especially with rates going up. There's just no options for people to buy a home here. And even right now, as I do this video, there's only about 4,000 homes for sale. So that's about 2 months of inventory. And keep in mind, we live in a county that has about 3.2 million people, so it just doesn't add up. And there was even months last year in 2021 where we only had about 3 weeks of inventory. That is insanely low. So depending on what rates do, I really think that our inventory is going to remain very low. And I want you to think about this because a lot of people that either own a home now or bought a home in the last 2 to 3 years, they really either refinanced or bought at an interest rate somewhere in between 2.5% and 4%. So that's incredibly low compared to what we're working with today. And it just doesn't make much sense to go sell your current home only to go buy something at a higher price and at a higher interest rate. Number 3, we're going to continue to see massive job growth here in San Diego. And contrary to belief, San Diego actually has a tech scene that is really starting to take off. And not to mention our economic sector is nearly outpacing every other city in the United States. So with the combination of tech and software companies, the many health centers we have, state and local government jobs, we have a really rock solid foundation. In fact, government jobs led all industry sectors with job growth over the past few months. So these are jobs that are very secure and that pay a pension. So whether you're in the tech industry, you're in the healthcare industry, or maybe you're a government worker, the future looks very bright for San Diego with jobs. Number 4, we're not going to see that many foreclosures here in San Diego. And in fact, even at this time, mortgage delinquencies are at a 32-year low. So let me put this into perspective for you guys, because back in 2010, at the very peak when people were losing their homes and all that horrible stuff, about 1 out of every 10 homes were in trouble. So that's about 11.5%. And now you can see right here that at the end of 2022, that number is lower than 2%. Also, unemployment here in San Diego is below the national average right now at about 3.1%. This time last year, we were at about 5%. Number 5, luxury sales will continue to go up here in San Diego. Now, let me tell you why. In 2019, we had about 9 months of inventory and only about 850 homes sold over that $2 million price mark. So for the sake of this, we'll do $2 million and above is luxury. And in 2022, this year, we had about 2.5 months of inventory and about 2,100 homes have been sold above that $2 million price range. So that's nearly 150% increase in sales in the luxury market. Here's what I'm seeing. People are moving here from other parts of the country, such as New York, Chicago, Los Angeles, parts of the Bay Area, and they're selling their primary homes or maybe some of their investment homes. They're cashing out on those and they're moving down to San Diego for better weather and maybe even a better quality of life. Number 6, interest rates are going to stabilize. Now, it's no doubt that rates are up double from the beginning of the year, which has seriously spooked a ton of buyers. And some housing experts are saying that rates in 2023 will calm down. Other housing experts are saying that rates will exceed 11% by the end of 2023. So my prediction is rates are going to stabilize somewhere in the high 5s to low 6%. And here's why. Inflation is actually starting to cool down a lot faster than what the Feds expected, which is great news. So if this continues to go on a downward trend with our inflation, then we're likely going to see the Feds stop doing as many rate hikes and they're going to stop tightening their monetary policies, which will ultimately help stabilize mortgage rates. Now, it could go a couple other ways, right? If we do hit this recession and it does come into play, then we're going to see rates actually drop down a lot further than we think. And if it goes the other way and inflation doesn't cool down as the Feds want, then we will likely see rates go up. With that being said, I think we're in for a very interesting 2023 housing market here in San Diego, and I'm very excited to see how some of my predictions actually play out. But however, I'm not the god of real estate, although I wish I was. So let me know down below what you guys think the market holds for 2023. I'd love to hear, and I will see you guys in the next video.